Good evening, everyone. It's your man C. Aziz Muhammad, Coach Cam for short. And today I want to share with you the Sequoia Lending platform, but more specifically, I want to talk about their gap funding product. So I got a video that I want to share. But before I get into that, let me just tell you this, because I'm excited about this, man. Anybody out there needs some money, right? Anybody out there needs some funding, right? Who don't? Okay. This is an unsecured, non-recourse, non-collateralized loan. Okay. You can use it for any purpose. It's sort of like a personal loan. You know, you don't have any collateral. If you're in business, you got a trucking company, hey, you can get these funds to actually promote your trucking company or to infuse cash into your trucking company. And if something goes wrong in the future, guess what? It's not tied to your truck, so nobody's coming to get it. It's non-collateralized. I don't care if you got a coaching program and you need to get funding. If you're a contractor, subcontractor, it doesn't matter. The funding is here. I'm going to put the link to this to my website with Sequoia in the description. That's all you simply have to do is, as you can see, go to the website, click on products, all right? And then just come down here. And as you can see, there's so many products that Sequoia offers. You got 1 to 4 unit investment properties. You got fix and flip loans. That's very popular right now. Multifamily loans and so much more. Working capital, business acquisition, commercial properties, land loans. But we're talking about, as you can see here today, we're talking about gap funding. All right, once you go here, you click on gap funding, and as you can see, it's a midterm loan in the form of unsecured cash. These programs require no collateral, only a personal guarantor. Clients can use the fund freely for any purpose. All right, we're talking about only having to have, the term for the loan is 3 to 7 years. You only have to have a 660 or better credit score if you're a W-2 employee. But if you're self-employed, you're going to need a 700 or better. You're on your credit, you just need your 3 positive trade lines, a low number of inquiries, a limited number of 30 to 90 days derogatory, verifiable income documents, rates as low as 6%, and you can get loans from $30,000 to $350,000. You just simply click apply now and fill out this information, and someone will get back with you in a fast, very fast manner. So I'm excited about this. Like I said, I'm gonna share a video that's gonna go into more details, but this is like, I'm just super excited about this situation here. And it's not gonna be like going into a bank, right? Because we know 9 out of 10 loans gets denied. Okay, this is your alternative. Okay, more lenient, doesn't require as high of a credit score as the banks, and the interest rates are comparable to what we're getting through a bank loan. It's just check it out, man. So let me stop talking, and I'm gonna put the link for this website so you can go look at some of the different products we offer and go ahead and get your funding. The link is in the description. But for now, let me stop talking and go ahead and share this video with y'all. Give me 1 second and we're gonna get this thing popping.
So tonight it's our pleasure to introduce Mr. Tyrone Harris. Tyrone has been in the business for a long time. We know each other for quite a while, and he is an expert in the gap funding space. So right now he is helping us to process all the gap funding in the back end. So especially right now, there's so many people come through us asking for gap funding. So exactly what it is, how do you get this thing through? How do you sell this thing to your client? So without further ado, Tyrone, the floor is yours.
Thank you, Alan. Can you hear me?
Yes, we hear you well.
Oh, that's lovely. I appreciate you. Appreciate you having me on. I'm excited to be on, and I'm definitely excited to basically tie everything together. Sequoia, we've been getting a lot of applications, a lot of interest, and a lot of and a lot of inquiries into the gap funding program. And basically what we wanted to say today is what is gap funding? That's what a lot of people are asking, on top of how do I get funded through gap funding? So the process is very simple. Like Alan said earlier, just you have a lot of help, you have a lot of contacts, you have, you can reach out by email, call, text, or chat. The biggest thing for us with gap funding is knowing your client, knowing your product, and knowing what it is. And that's what like I said, as a Sequoia advisor, that's what I'm here to talk about and to basically lay the groundwork for. So if you've been in the real estate field, let's say prior to 1995, you know what gap funding is as far as real estate goes. But gap funding is basically an umbrella term that exists a lot of different capital ventures. So the first one is unsecured lending. The second one is personal term loans that consist of a line of credit. Basically, what gap funding is a concept, an umbrella concept. It involves all of the lending products that are not real estate related. It's basically, like I said, unsecured lending, personal term lending, business term loans, and line of credit. We have personal lines of credit, and there is this business line of credit. So how that works is, it's 100% credit, income, and debt to income based lending. So you have a client for whatever purpose it is. It could be for working capital. It can be for a down payment on a real estate transaction. If it's an investment property, it could be for expanding their business, or paying employees, or buying products, or I dare to say go on vacation with it. So there's a lot of things that encompasses the gap funding umbrella. And gap funding term that Sequoia, that we can coin as an advisor, is gap funding is basically bridging the gap between your down payment or your working capital, or increasing your business, or even starting a business, being able to use your personal credit, your personal good credit, or your income to be able to get funded. There are a lot of lenders out there, but a lot of lenders have a lot of nuances to getting the funding that you need, if it's for whatever reason, if it's for real estate purchases, if for debt consolidation, or whatever. And what we found is we bridge the gap between getting that funding and being successful at getting that funding, and getting that funding not just one time, but using that funding to build on it, and to build on the capital that you're receiving, as far as we would say, as far as being able to use that capital to grow your business, to expand your business, to increase your credit score, to be able to go to the next phase, which is applying for the line of credit after you've established your credit. So it's not just a process of spending money to be able to get where you need to go. It's actually a product where we can grow your business or grow your credit to be able to get the line of credit by actively receiving income, or actively receiving funding. So 1 second here, I'm trying to bring up the PowerPoint for you guys as well. And I have it coming up here. And I'm going to run through the process, but I'll leave some time for you guys to answer questions, or ask questions, and if it's specific or general questions. But the main thing is what is it actually? So I went over what it is. It's unsecured lending. Unsecured lending is basically unsecured, non-recourse, non-collateralized lending. So let's start with one aspect of it. So say you have a lot of clients that are in the trucking business, or they want to expand their trucking business. Well, how we work is you use your income, use your credit to qualify to expand your trucking business, or to start a trucking business. Our unsecured lending process is cash to you. It's not It's not a collateralized loan against the truck. It's not a lease. It's cash. So that person will be able to take that cash and buy their truck. So in a down market, what happens is they're not in a situation where, you know, if the businesses are doing great, that the lender will come after your property or come after your truck or come after your business to something to repossess or take. Or if it's a lease, something that, you know, they could take back your lease. If the businesses are going great, you own that truck, you own that business or whatever you're buying with your unsecured gap funding loan. You're able to use that collateral because you have equity in it and use it to grow. So that's my whole aspect of it when it comes to what I bring to the table and helping people establish what their needs are when it comes to unsecured. Maybe unsecured isn't for you. Maybe you need a personal line of credit to have that potential to have a line of credit to use some of it now and some of it later if you're doing a remodel or something like that, or you don't have an asset right now but you want to grow your credit to get to the point where you could apply for $1 million or $500,000 line of credit. So that's what gap funding is. It's unsecured, non-collateralized lending where you could use it for any source or any reason. You know, if you have a coaching program, if you have clients that are coaches and they want to offer financing to their students, if they don't have the cash to do it, if you have a bunch of clients that are general contractors in the rehab space, and they go into a living room and they have a bill that's $50,000, but their client can't come up with that bill. You can be the financing arm for that person, for that general contractor or that roofer or a builder to be able to offer financing for them with no strings attached. It doesn't cost them anything. You can be that financing arm for them. So we already went over the how does it work aspect of it. And the how does it work aspect of it is what Alan was talking about earlier, is applying for the loan online and uploading your documents and getting your documents in so you can get what we call projections. So how it works is you get initial projections. So based on the documentation you upload, based on your credit report, which your credit is a factor, 650 credit score, your debt to income ratio, your all your debts are looked at, and at the same time, your income. So if you're a wage earner, you can apply. All we need is your pay stubs and your W-2 for the most recent year. You're self-employed, all you need is your last year's filed tax returns. We're on 2021 right now, but eventually, since we're after the filing date, you will need 2022 eventually when after the extension cutoff is. And then if you're a 1099, we just need your 1099 for the last year. That's it. And then if you're on a fixed income, we can fund a person with a fixed income as well. If they have Social Security income or VA or pension or anything like that, we just need your pension and award letters and bank statements to show that you've been getting that pension or that income for for the last 3 months. Obviously, it's longer than that, but we just need the last 2 to 3 months bank statements to show that they've been getting that income. And that income is analyzed. And like Alan says, if you receive it that day, we can get an answer back, usually by the end of the day. Normally is 24 hours. If, we get an influx of applications, sometimes it's hard to get a review date the same day, but 24 hours is very, very realistic to get a review date. And once you get that review date within 24 hours, you can turn around and you get your projections. We're very hands-on. One of our advisors will reps will basically walk through the process. Most of the people that are online are reps and account execs with Sequoia. So the process is once the client gets their approval, they will be notified of that approval. So the best thing to do is follow up with them, make sure they receive their approval email, make sure they check their spam, because the next step is they have to book their welcome call. And once they book their welcome call, they will at that time, they will be told the next steps in the process, what they will need, how long it will take, and how they will get funded, and what they would need if the lender needs anything additional from them. So that in a nutshell, it's that. But in my opinion, the best thing to do is to help the client along the way. You know, let them know that if you're unable to upload your documents, they can be emailed. Have them email the documents to you. That's we're in a position right now that we want to get away from doing everything, you know, out of online. But email is very valid as long as they're PDF, credit report, PDF of your income documents. You can send a JPEG of the driver's license front and back, but income and credit is very important. We have to review that to get their projections. And I tell people, don't hang on the projections. When you get your projections, they can sometimes increase, but the initial projections are just that. It's just an initial review. So we can work on other options. Another big question I know Alan gets asked a lot because he always asks me all the time, can you apply for more than one? Yes. If you're a business owner and you, I saw a question there, Alan, too, that was really good that we can answer. But if you're a business owner and you have a business that has been getting income for the last 2 years, you can apply for personal and business. You can double dip. You know, you can apply for unsecured business, unsecured personal. You can apply for a business line of credit. If you qualify for it, you're going to get approved for it all. But you start with one, you know, see what you qualify for and work your way through the system. And another big question that we get is, who is it for? And we're not trying to tell you guys what the perfect client is, but I wouldn't use this money to pay for a wedding. I wouldn't use this money to, you know, go on vacation or, you know, buy a luxury car. Unless that's what you want to do, that's fine. But you have a lot of people that want to buy investment properties. You have a lot of people that want to buy, buy a new business or buy a franchise or start a business or expand a business. These are your perfect clients. This is not wham, bam, thank you, man, quick, fast money. It's unsecured, so it's like an A-paper mortgage loan. You have to go through the qualification process. And this money is a 7 to 10 day turnaround process as far as qualification, going through the process, getting approved, and receiving your money. So the faster you get the documents in, the faster you respond to the back office, the faster you get funding. And that's very important. And on our side, it's very important. The quicker you get the documents and the quicker you get funded. But we don't care. We don't care what your business is. We don't care what your how much the property is worth or what that's for. All it matters is, do you credit qualify, income qualify, debt to income qualify, and credit worthiness. We don't care what you use money for because you're getting cash. So it's for, you know, if you're establishing a business, in my opinion, I would say that you owe it to yourself to go this route until you're able to get an SBA loan. You know, SBA loans are available to for experienced people, but if you're not experienced, you need startup funds. This is the best step. This is step one. This is step one to get the money you need. Step one to establish yourself in the real estate business. Step one to establish yourself in whatever industry you're looking to take over, because now you can offer financing in that industry. But business owners and people looking for working capital and to expand their business are the best clients for this loan. It's not a cheap process. It's not a cheap loan. But again, we have to cover a lot of bases. At Sequoia, we don't see a lot of defaults, but at the same time, a lot of people, if you do default on it, we have to get an insurance bond out on the loan that you take out with the lender. We have to go as far as to, you know, make sure the reps are paid and taken care of. So the money isn't cheap, but if you're a business, you look at it as the cost of doing business instead of just, oh, you know, you're charging me, you know, a certain amount of interest rate. Well, a normal situation where if you defaulted on your house, the bank takes the house or it takes the car. In this business, this is consumer lending. There's nothing for the lender to take. So your client has to know that this is a very risky venture for the bank because they're giving you cash, but at the same time, it's a great building block to establish yourself. And in a nutshell, over the last, I would say, 15 years in the unsecured lending space, 90% of the people in this space are not using it to the potential they should be. And I'm saying personal term lenders and brokers and account execs and reps, they're not using this space enough. There's trillions of dollars in unsecured lending and consumer lending for working capital space that people aren't taking advantage of. The top 10% of the sales reps in this business are making 90% of the money. And Sequoia Lending is trying to turn that around to let people know that this is available for everyone. Even if you qualify for 10,000, 20,000, you can build on that and grow from there. But we want to make it easier for everybody to have access to this capital and have access to best practices and keep a steady pipeline. And know that when you submit a client, if they have a 650 credit score across all bureaus, if they make more than 30,000 a year income, provable income, and they have low inquiries and they have enough trade lines, they're going to get something to build on to grow their business or to at least have working capital to do the things they need to do. So Alan, that's my elevator pitch. But
Okay, great. Thank you so much. Tyrone, if you don't mind, on the chat box, there's a lot of questions. So can you go through it and answer some questions for us?
Of course. The first one I saw that's why I started talking about the scenario for line of credit. That's the first question I saw, but I can go up to the top. And someone said the sound was a little distorted. I hope you guys are able to hear now. But basically, Rosalind Washington was asking scenario line of credit. Well, line of credit is very simple. Line of credit is, we do offer that, but the line of credit is a little more, I would say, we dig into it a little bit more. So a personal line of credit, you can get away with a 650 credit score, but the issue with that is that line of credit will be limited because of the credit score. If the client has a 700 or higher credit score, they will get a better line of credit. It's not so much on income, but it's on credit worthiness. So if you have a client that has a 700 credit score and let's say they have, a mortgage, a $40,000 car, they're more apt to get a line of credit than someone that's just starting out credit wise. They have a secure credit card and a couple smaller utility bills on their credit report. They probably won't get approved for the line of credit, but just somebody with a healthy line or a healthy credit history that's probably have like 3 or 4 credit lines that have 2 years or more on their credit, they will definitely get approved for it. It's just having established credit is important for a line of credit. But this is the thing: if somebody wants a line of credit, start out with a personal term loan, 6 to 9 months, 6 to 12 months, boosting their credit score, then and then getting some source credit line or some source installment loans or unsecured personal loans. 6 to 12 months down the road, they can come back and apply for a line of credit. We help people build that. The next question I see from Brandy is, how does the business owner offer financing for services or high ticket items? Are there fees to offer consumer financing? That's the beauty of it. There are no fees to the business owner. We have business owners that are dentist offices that offer financing other than Care Credit and other lenders. They offer finance to their clients. We have general contractors that offer financing to their clients or their potential clients. There is no cost to the business owner. The costs are for the client. The client is getting cash. But once the client gets approved for that cash, they're using cash to pay for your service. So there are no fees for setup. We'll give, on your behalf, we'll give the business owner a link, a Sequoia Lending link that they can embed on their website, embed in their emails and on their social media. So they use that's branded toward you to be able to use. So the consumer takes all the fees, right? The consumer pays a commission, they pay the fees, and obviously they're paying their note. So you don't have any. So the business owner doesn't have any liability in that at all, and that's a beauty if you're working with general contractors, because they get cash. They don't have to put a lien or mechanics lien on the property. They don't have to offer finance out of their pocket, pay for things first, and then turn around and go after the client if they don't pay. So that's good. The next question is a really good one. What would a good ratio of income and fund to get approved? So a good debt to income ratio is 20%. So people say, oh, that's really harsh. We go up to 40% DTI. So 40% of your debts based on your income. So how that works is that debt to income ratio is affected by what affected by your DTI is your interest rate. More times than not, if you over 40%, you won't get approved, but you'll get afforded the opportunity to reduce your debt under 40% to get approved in the future. But the biggest thing is, if you have someone that has a DTI of 40% and they're not using their spouse, I would put your spouse on there to increase it and use their income. Spouses are the only one where you can actually use a spouse's income without their credit. Anybody else, if you have somebody co-sign for you, they have to apply fully on their own. But credit chat. But the next one, it leads me to the next question. Do you accept co-signers for loans of someone with challenged credit? We go just like mortgage. We go off of the lowest middle score of both clients. So if the person is credit challenged, so they have under 650, they wouldn't get approved anyway. So they would have to have that person apply with that credit that's acceptable, right? And they can't qualify, but if they have an agreement between them to, whatever that person's going to do for them or help them out or part of the business, that's fine. But on our end, everybody on the loan would have to qualify credit-wise. Income-wise, if they all credit qualify income-wise, you can have 4 or 5 people on it. We don't care. But that one person that is credit challenged would have to come off the loan, and then that person would have to qualify by themselves with the credit score that qualifies. And the next question from Kimberly is, how long before the loan goes through once they apply and answer your questions you may have? So I always tell people, it's not a time limit. It's on the client. So if we get a pre-approval back within 24 hours of the same day, and they book their welcome call to go over the questions and answer the questions, they get an agreement. So the agreement comes 24 hours after that welcome call. So say they get approved by 6 different lenders at the same time. Because of how we work with hundreds of lenders. So there's a possibility that you'll get loans from multiple lenders. So how that works is that you may get funded from one lender within 48 hours. But if you got approved from 5 different lenders, you may get approved, 7 days down the road from another lender. So say your total projection is 150,000, you may get 50,000 in a matter of 48 hours approval. But another 75 grand could be coming in 7 to 10 business days. So it could all come to that account in phases. It could be rolled out. And I love this next question. Can a person apply for funding for a startup, like purchasing goods for a business just being created? It's 100% on their credit. They can use the money for whatever they want. A lot of startups will apply for SBA loans and other types of loans, and depending on their credit or depending on the type of business, they won't get enough money that they need. So yes, this money is used as a gap because it fills in the gaps for everything. I would say the biggest thing is that if you're doing a real estate loan, this is a compliment. You don't have money for your down payment or closing costs or reserves or rehab funds, then apply for your, through Sequoia's hard money loan, and then apply for this at the same time to get them both funding. Because you don't need seasoning or sourcing on a hard money loan or on a fix and flip loan. So apply for the same time. Same thing with business. You apply for your SBA loan, apply for this loan at the same time. So you have the working capital depending on how much you get from your SBA or for your commercial loan or business loan, and put this with it. So you get, it's a complimentary loan. And how much homework do we need to do before we can tell we have a serious loan candidate and let them apply? What to look for? I would say right off the bat, and that's a great question. Credit report. I would say make sure they pull their credit before they apply. And we have a link. Sequoia has a link that they could use for MyScore IQ or Identity IQ to pull their credit. It won't get an inquiry for them, and then just review the credit report. If all their scores are over, they pull a tri-merge credit report. If all their scores are over 650, I would submit them. Income-wise, you might think it's marginalized to not review the income, but in my opinion, just send the income in, let us review it. Credit is always the biggest gatekeeper. Make sure they send their credit report in. Make sure they have income first. You can ask them, you're a wage earner, you get paychecks, then that's fine. Business owner, did you file your 2021 tax returns? That's about as far as we go with homework. But just make sure they have credit, make sure they have income, and they should apply. And then let us do the rest. We can do all the rest. The next one, I love it. Does the client need to have filed tax returns? Are they doing a 4506T? This person knows the business. No, they're not doing a 4506T, but make sure they have a filed tax return. I'm going to leave that up to your own interpretation. So they don't. Is there a cap on the gap funding? Can a person use their personal IRS tax returns? Yes. Okay, this is a misnomer. When you apply for business or for personal term loans and you're a business owner, you can still apply for personal term loan, unsecured. Business is an extra. So even though they're self-employed, they are always applying for personal term loans or personal unsecured first. If they want business line of credit or business term loan, they'd have to request it. So they have to say, I'm looking for this as an addition to. So you can supply personal tax returns for them for business and personal. Because most business owners, if they're an S corp, they have filed their personal tax returns as well as their business. So you can do both, and that's fine. On top of that, is there a cap on gap funding? Yes. The max you can get is $350,000. I've seen loans for $450,000 or $500,000, but if you think about it, the cap is your debt to income ratio. So put it like this: if somebody makes $100,000 a year and their DTI, their debt to income ratio is 20%, they're looking at probably getting about double what they make. So reverse engineer that. If they have a 30% DTI, they're probably looking at around 75% up to the match of what they make on a year, and that's taxable income. If their DTI is approaching 40%, they're looking at about half of what they make a year. So they make 100,000, their DTI is between 35 and 39, they're looking at 50,000 in funding. If their DTI is under 20, 16, 17%, they're probably going to come out with about 20 grand in funding if their income qualifies, of course, and credit is probably, I would say, a 680 credit score, $100,000, and with a 20% of lower DTI, they're going to look at around 175 to 200 in funding. But if they make 30,000 and their DTI is 30%, they're probably going to get qualified for 30 to 35 to $40,000 in income, which is great, right? If they're just starting out and trying to bridge the gap. The next one from Brandy is, I love this question. I saw it when I was talking earlier. I met many business owners who can't get business loan or line of credit through the traditional financial institutions. Banks require 2 years of business and 100 to 200K previous year revenue. These clients are sometimes offered a HELOC. In your opinion, what's more advantageous for a new business owner looking for funding? I know HELOC rates would be lower. HELOC rates would be lower because HELOCs is something they can turn off. If you don't pay it or if you default, they can turn off your HELOC, or they can put a lien against your property for the home equity line of credit, right? So of course they're lower because the banks have collateral that they can take. On ours, The interest rates are higher, the fees are higher, points are higher because it's totally unsecured. So if your business defaults, you don't need to do anything. We don't require 2 years tax returns. We don't require 2 years in business. We just require current income. That's it, current income. We don't care about previous year's revenue. As long as you, obviously you have to have filed tax returns from last year, but as long as you can prove that the business is currently making money and your previous tax returns show income, that your taxable income, not gross, not adjusted gross, but the taxable income, then you're fine. And then we can, you can submit. But the business line of credit, you just have to show you're in business and the business is currently making money for the business line of credit and for the business loan. Obviously, you have to have a entity docs, articles of organization or articles of incorporation, and your EIN number to start. So, and we don't care if the business was, changed names or you're something else before, as long as you can show that you as the client, as a guarantor, as the same person. The next one is really well. Is it a hard or soft pull on the credit report? Neither. You pull the credit. The client will pull their own credit inside of the document upload. Go ahead. Oh, I'm sorry. I thought someone had a question. Is it a hard or soft pull on the credit report? Neither. Once you complete the application and you go to the, you hit submit, you will go to the document upload page. There's a link in the first question on the document upload is to pull their own credit. It's a link to MySparQ. They pull their own credit and they upload that credit report. We do that so they don't get an inquiry, because inquiries affect approvals a lot in this business, and that's one of the main gatekeepers of unsecured lenders is a lot of inquiries or many inquiries in the last 6 to 9 months. So another big one. I'm sorry, was that you, Alan? Sorry.
No.
Oh, sorry, I heard somebody chiming in. The next one is, if you have, for example, $30,000, 650 credit score, no profit and loss, can you still encourage them to apply? I would encourage them to apply, because if they make 30,000 and that's their income as far as their wage earner or their job, they should apply, because they'll get funded based on their personal income and use that funding that they get to use for their startup, their business. I highly encourage that person to apply. And the next question is, what about sole proprietor clients? What program is used for these? Sole proprietors, in my opinion, encompass a lot of things. You could be a sole proprietor and work for different companies on a 1099 basis. So usually I have sole proprietors, they're a hodgepodge of income. They have 1099s, they have their 2021 tax returns, they might have previous wage earner income or cash income that they received. So a sole proprietor, I would use all of it. I would use the self-employed module and the 1099 module if that's what they do. But let them come to you and tell you what they have, and then they let you know what they have, then proceed proceed in kind. But I wouldn't tell them what to do. Sole proprietors, you say, look, how do you get your income? How do you make your money? And then you can reach out to us at Sequoia, and we'll guide you on what we would need income wise. But yeah, I've never had a sole proprietor sending file into us, and there wasn't multiple income streams. So I thought there was a success fee for gap lending if the client is approved. Yes, there is a 15% success fee. The normal going rate for that the client has to pay is a 15% success fee to 20%. This is unsecured funding. The majority of that success fee that's paid through our lending source is used to pay for their bond. So if the person first payment defaults, then we put out a bond on them so they could pay, or so their insurance is covered in case they default. Because if the person has a first payment default, and the first payment default means that they default on any of the first 3 payments, and they get funded cash, is non-recourse to the client, but they come after us for that money because they defaulted on it. So that's why we have to get a bond out on every client with the success fee. can you put the gap funding requirements under the featured products in our back office? I think they were there, but I'll let Alan kind of go over that as well. But I think they are there.
Yeah,
We
it's
can-
actually there. Yes, it's
Yeah,
under the
I
gap
said
funding.
I know they're there. So, yeah, we can elaborate on them a little more if that's what you mean. But yeah, but we can go over those more as well. But this person, Ernest said, I might have missed this if you already answered it. What's the minimum income requirements to qualify for this type of funding? It's 30,000. 30,000 is the minimum because if you think about it, if our minimum purchase or our minimum funding is 30,000, if they make less than 30,000, their DTI is going to be through the roof. Let's say they get qualified for 30,000, the payment $700, and they only make, $2,400 a month. Their DTI is going to be 50%. If you think about that, so we always tell people like have at least a taxable income of $30,000. Lower than that, we have done loans for $5,000-$10,000, but they're pain to do, but they are doable. But we just have to have a threshold. We go below 30,000, then where do we end? Well, where do we stop? So 30,000 is basically where we like to stay. And the other one, this question, I saw this too when we were talking. Can gap funding be used for pre-construction costs? The gap funding money can be used for whatever you want. If the client has to qualify, most construction loans are hard to get funded for, and then for your soft costs or your soft fees. So they do have an opportunity to use this for theirs. And the website says 620 score for gap funding. We need to update that, Alan, because yeah, it is 650. Well, the thing is, we made it 620 because a lot of people were saying their credit score was 620 and then it wasn't. So a lot of people, that's a good thing if you don't know your credit score is higher, but it's fine. If you have a 620 client, send them in because we can work on their credit repair as well to get them above that 650. We don't want to turn away anyone, but if you don't want to waste your time with the credit repair aspect of it, I would just, when you advertise, I would say 650 for everyone. But yeah, it has to be 650 for, and further clarification, for personal term loans and personal line of credit is 650. For business, it's 700. Business line of credit is 700 for for across the board. You have to have at least 700 on all three scores. So. And the next question from C. Harris, how do we get the credit link? The credit link is when they complete the application, they're redirected to the document upload, and that's the first question in the document upload link. But Alan has the credit link, but we can probably post that somewhere else, Alan, send it to everyone that's signed up. Yeah, and so they'll, because it's hard sometimes. The client, this is the thing, guys, if the client is doing the application on their cell phone, it will not redirect them to the document upload link. They have to do it on their cell or their computer. You can do the application on their cell phone, but you have to tell them if you want to upload your documents, I would have to send you the link to upload the documents, or just email the documents in to you, the rep, and then they'll do it themselves. But that's the best way. And then the same question was the next one. What's the website link to check your credit again? So that link, Alan, we can just post that again somewhere else, or just post that in the group and then add everyone so they'll have access to the credit link, and it's $1 for a 7-day trial. So they can continue the credit monitor if they want, but to get the credit report, it's just $1. They pull their credit and then they can cancel. If they pull their credit, send it to you, then they can cancel the monitoring, the credit monitoring. We don't care. We just want the credit report. And next question from Charlene. Once we have a loan customer submitted, what is a reasonable time frame for referring an agent to be notified of the lending success? How long is reasonable time-wise before the agent gets any referral conversation? That's something that I'll let Alan answer, but because I don't handle the commission structure part of it. But when the person's approved, they have 3 days to pay their invoice. So if a client gets $50,000 on Monday, they are given an invoice. that Monday, and they have 3 days to pay that invoice. So the time frame from them receiving their final round of funding to their invoice and to them paying, that's up to the rep. That's up to you guys to. We let them know when you receive your invoice, you know, they get the information to pay their invoice. The issue is that most people will wait till the very last day to pay their invoice, or some people pay their invoice right away. But, you know, give your client a courtesy call, you know, thank you. You'll be notified, obviously, that the client got funded, but you would have to say, you know, congratulations on your funding. You'll receive your invoice within 24 hours of your last funding. You know, make sure you pay your invoice, because it's very important that we get the surety bond on them right away before their first payment. First payment scheduled, and then in that turn we have a fiduciary duty to tell them, look, make your payment, and then that's how we track the commissions after they make their payment. This is no upfront fees. They don't have to pay anything upfront. It's a performance-based business. Once they get their funding, then they have to pay. So it's advantageous to let your client know when they fill an application that they signed off on this. They signed off when they click the button at the bottom that says submit. One of the questions is, do you agree to the 15% success fee? And then they click yes. If they click no, their application won't go any further than that. It's automatic decline. Unless they clicked it by accident, you follow up and say, where's my client? Well, they click no on the success fee. And how's about the estimated interest rate in terms? There is no estimate. I tell people that all the time. It's 40 factors that go into what the interest rate and the terms are. And once they get their approvals, then again, they have to pick. So say they get 5 different lenders, they only want 30,000, but they got approved for 60, and there's different interest rates and different terms. They can pick which ones they want. They can say, I don't want those two, I only want these two, or based on the terms and rates. So that's what we have to contend with. The next question is, what's the website link to your credit? We will put that on there. And somebody said it again. I love it that everybody's paying attention. You mentioned credit repair. No, I'm sorry. This is a really good question. Success fee, somebody said success fee with a question mark. Success fee is basically what they pay for us successfully getting them funding. And the success fee is paid out of the proceeds. Every client pays the success fee out of the proceeds. And that's how it works. They pay the success fee out of the proceeds, and then they go from there. But when it comes to the success fee, we do not get paid unless we perform. Even if they wanted 100,000 and they only got 30, if they take the 30,000, they have to pay the success fee out of that 30,000. If that makes sense to you guys, I hope that makes sense. But whatever they get funded, they pay the 15%. So it's not, a flat fee. So if they get funded a certain amount, they have to pay that to the lender, and then obviously Sequoia gets paid out of that, and they pay their surety bond after that. But there isn't a fee to pull credit. The fee is only $1, and then it's a trial. It's a 7-day trial. If you on this call and you're a mortgage broker or you're a realtor or you have access to credit or you do credit repair, pull your own credit. And we just need a full tri-merge credit that lists all their debts and their history, not a summary. We just need a full credit report. And if it's something that you've already done for them, you can upload that for them. And the next one is, I like this question too. Can we do what you're doing? You are doing what I'm doing. We're all doing it. You can reach out to any client, any business, and have that business offer financing and make them your client. Seamus Thomas here said, you mentioned credit repair. What is the process? How long does the repair take? Sequoia we have our own credit repair reps. So it just depends on the client. Some clients only need a rapid rescore. Some clients need total credit repair, removing items. Some clients can probably be done in 3 days by just removing inquiries from their credit report. So that's something that they could get a quote on to help. This person said, I submitted a file today. Client is Hall. I think they're saying client's last name is Hall. Sole proprietor, 734 credit score, 100K in monthly income. What's your thoughts? I submitted all the documents. Give an email to support with the name of the client so I can follow up on it. So we can, or client's name is Hall. I didn't see a client with the last name Hall in the system. Did you, Alan? If you did, let me know. But I didn't see one with
I
last
will
name
have
Hall.
I will have support to check on it.
Yeah. When will the website be updated with BBB? That's another question for you, Alan.
Okay, very good. So yes, Sequoia we are officially BBB certified business. So we are, as we speak, updating the website right now. Our marketing team is redesigning all of our flyers, business cards, and everything with the BBB logo on it. So you will hear from marketing sometimes this week.
Awesome. Yeah, and a lot of questions about the success fee. Yeah, the success fee is 50% of the loan amount, 15% of the loan amount. It's so basically if they get 100,000, they pay a $15,000 success fee, and they get the remainder in cash. So they get all of it in cash. They pay the success fee. The thing is that success fee gets in their insurance, their surety bond, and on top of that, they get monitored to get qualified for up to $1 million line of credit. So if they make those payments on time on that loan, they get $1 million line of credit. Is there a fee to client for the credit repair? It depends on what their credit repair is. Can a gap be used to consolidate credit cards? Yes, you can use it to consolidate credit cards or the loans. Ty, what is your email address? I'll let Alan put that in the comments as well. My email address. I'm sorry, I've been long-winded. I'm just like Alan. I know you can hear it. I have a cold as well. I guess it's going around. And I'm in California, and it's like 56 degrees right now. It was raining and cold earlier in Southern California, so everybody is kind of suffering for it. But yeah. Okay, credit repair is $750. That's good to know. But yeah, anything is possible when it comes to this. When you're selling these loans, another big piece of advice or a hack or a nugget I tell people, I get this question a lot. Can we do this on our own? That's what I get from a lot of clients. Yes, you can do this on your own. But the way the consumer lending business is set up, consumer finance business is set up, you're not. Oh, I'm sorry. I missed a really good question. The lenders, yes, they will repull credit, but the lenders will repull credit as a soft pull once they're approved. Once they're fully approved, the lenders will pull credit just as a verification, an identification verification of who the person is. Yes, but it's a soft pull. And the next really great question I got is, I have clients who own the body sculpting business and one who offers life coaching. Could they offer consumer financing embedded link for gap funding to their clients? 100%. That is one you should be going after hardcore, because that's a high ticket item. Body sculpting, life coaching is a high ticket item. And you should be giving them the link to embed it in the website or in their advertisements, so their clients can get your clients can fill an application. And majority of these businesses will receive a 30 to 40% increase in their business just by offering financing. That's another nugget, Randy, you can let them know. But the other nugget I was trying to go off of is consumer lending business. The way the business is ran, it's a stronghold on the business right now. So what I mean by a stronghold is, you've probably done this before where you got a loan through SoFi, and then you try to go in and get a loan through another lender. See, we go with the accredited lenders, right? So if you go through another lender, they'll say, oh, well, you have a loan through this company, so you're not allowed to go back in. So you probably got 50,000 from that lender, but you can't go back in for 6 to 9 months, sometimes 12 months. But how our system is set up and our relationship with the consumer lending associations, they fight for our business. That's why Sequoia is so important right now, because they fight for our business. You could get 5 to 7 times as much as you could on your own. That's what I tell people. Yes, you could do it on your own, but if you went on your own and got the one loan, yes, you got the one loan, but that's it, and you're done for for 6 to 9 to 12 months for another year. If you did it through us, that 30,000 could turn into 150,000, and you in turn get all the money you need if you qualify, and then we've done our part. That's how we set ourselves apart. That's how we create value in the market, by creating something no one else can create right now. And another great question I see is, so they will pre-qual off of the $1 credit service, but once they select the approval, it will then be a hard pull. No, there's no hard pull. They all do soft pulls for identity purposes after the approval. And if you want, it's a soft pull. Soft pulls fall off, or you can just pay to get those soft pulls removed. But no, the lenders don't do a hard pull at any time to do an approval process or after the approval process for any client. Yeah.
Okay, great. Well, thank you so much, Tyrone, for answering a lot of these questions. And I saw the last question is about the commission. No,
Yeah.
you don't make the 15% is success fee. It's what the client is paid to get this fee. And you hear from Tyrone, a lot of those money is going to buy the surety bond and things like this. As Sequoia, for us, referring the deal, it's 4%. We got 4% out of that 14%. So you got 46% out of that 4% that we got. So
yes,
so whatever your commission is, it's based on what Sequoia generates. So if we make $1,000, you make $460. If we make $10,000, you make $4,060, 600. So on and so forth. So watch that Comp Plan 5.0 on our YouTube channel. So just like Tyrone said, we are not just doing one loan. A gap funding is just one loan, but however, because of this one loan, it actually can expand it to many, many different services. So for example, if somebody come in here to apply for a gap loan and you realize that the credit score is not that good, we fix the credit for them. And once their credit is fixed, they come in, they get the gap loan, and now they can go on to do their business. And guess what? They will come back to get more and more and more funding. And again, that is how we build our relationship with our clients. Okay. So ladies and gentlemen, thank you so much for attending another episode. And thank you, Tyrone, all the way out in California. We will meet you in person one day. Remember, guys, this Saturday here in Rockville, Maryland, Virginia, and DC, Maryland area, we do have our event. So event is already posted on Facebook. We still have some seats open. Please register, and we will see you on this Saturday. Next Saturday, we will be in Delaware. So again, check us out. Join us either online or offline. We love to see everyone. And remember, why are we doing this? We are not here doing this just for one deal. We are here to disrupt the commercial lending industry. So let's go out there to conquer the world, guys. Good night.
Yes,
See you
sir.
next week.
Good night.
Thank you, guys.
Thank you.
Thank you. Bye-bye.